Hey everyone, it's Julie here with TipRanks, and today we're taking a look at 3 strong buy stocks under $10 per share. So let's get into it. Alright guys, welcome back. Thank you all so much for being here. Today we're taking a look at 3 small cap stocks that all come in with unanimous strong buy ratings from Wall Street and some price targets that would imply some double-digit upside potential. These stocks are all priced under $10 per share. Now there can be a bit more volatility with these small cap stocks, but also some great room for growth. So we're going to take a look at these companies, what it is that they do, and what those analysts are predicting for the stock's future. We found these companies today using the TipRanks Stock Screener. Found right under research tools with the stock screener, we looked for small market caps, double-digit upside potential, and a strong buy consensus from Wall Street. With our list down below, we then sorted the stocks by price to narrow down our list. And just before we get into today's stocks, this is a friendly reminder that if you enjoyed the video, make sure you hit that thumbs up button and that you're subscribed to the channel. You can also check out the TipRanks Stock Screener for yourself over on the TipRanks website or by downloading the TipRanks mobile app on your iPhone or Android device. Links are in the description down below. Now let's get right into our strong buy small cap stocks, starting things off with Hecla Mining. They trade under the ticker HL and are currently priced at $6.34 per share. This is a stock that we talked about before, most recently back in June. Over the past year, it's gained 67%. In the last 3 months, is up 15%, and since June, when we discussed it there, up about 20%. Hecla Mining is a silver and gold production company. They discover, develop, produce, and sell silver, gold, and other base metals. They are the largest silver producer in the United States, producing over 45% of the country's silver, and also own Canada's only primary silver producer. They are the third largest producer of lead and zinc in the U.S., and their Montana assets contain over 2.5 billion pounds of copper and over 300 million ounces of silver. Hecla did share their Q2 earnings report back on August 6th and came out with mixed results, with a slight miss on earnings but a revenue beat. For their second quarter, they reported earnings per share of 2 cents, which did fall 1 cent short of analyst expectations. Revenue, however, came in at $245.7 million, beating expectations by nearly $34 million and being the highest in company history, increasing about 38% year over year. Weighing in on the stock following that earnings report was an analyst from H.C. Wainwright. He maintained a buy rating on the stock, saying that there was notable year-over-year improvement in silver and gold production. The revenue growth was largely attributed to a full quarter of production at the Lucky Friday mine, complemented by increased sales from other projects. Hecla Mining has 6 current analyst ratings, coming in as a unanimous strong buy. And the average price target comes in at $7.78, implying an upside potential of over 22% from current prices. Looking at those ratings down below, on the low end we have a couple both at $7 for an upside of 10%, while our high-end price target is at H.C. Wainwright at $10.25 for an upside of over 61%. Second on our list today is ACHR Aviation. They trade under the ticker ACHR, currently priced at $3 per share, and arguably headed towards a bottom here soon after falling 44% over the past year. The stock did climb up here in July, but over the last 6 months is down 28%. ACHR Aviation is in the business of eVTOLs, or electric vertical takeoff and landing aircraft, basically flying cars. Their goal is to transform urban travel by replacing long commutes with faster, more sustainable, and cost-competitive air taxi flights. Their Midnight aircraft is a piloted 4-passenger aircraft that can travel up to 100 miles on a single charge. It's designed for rapid back-to-back flights with minimal charge time in between. Their first major corporate partner is United Airlines, which has ordered 200 of their aircraft, and they've also partnered with the U.S. Air Force. They expect to receive FAA type certification in late 2024 and begin the first phase of their operations in 2025. They're also partnered with one of the world's largest car manufacturers, Stellantis, who serves as their contract manufacturing partner to help scale their manufacturing. ACHR Aviation shared their Q2 earnings report on August 8th, and though the company isn't profitable yet, they did come in with a narrower than expected loss. For their second quarter, they reported a loss of 32 cents per share, which was 4 cents better than expected. The company did announce some key terms of their contract with Stellantis, saying that they'll contribute up to about $400 million to help scale their Midnight manufacturing to 650 aircraft annually. The company also secured $230 million in additional equity capital since the end of the second quarter, and also had a milestone of delivering their first Midnight aircraft to the U.S. Air Force. Management said it was one of the company's most productive quarters yet, and recently weighing in on the stock was an analyst from Canaccord Genuity. They reiterated their buy rating while commenting on some recent corporate developments, saying that despite the temporary departure of their CFO for medical leave, they're confident in the company's interim financial leadership, saying that Priya Gupta has a robust financial background in finance, including experience in the aerospace sector and a proven track record at Bloom Energy. On top of that, they said the company's substantial capitalization following a significant funding round led by Stellantis positions ACHR Aviation favorably for future growth. ACHR is rated a unanimous strong buy based on 5 current analyst ratings, and the average price target comes in at $10 per share for an astounding upside potential of over 233%. Looking at those most recent ratings, all of them coming in with triple-digit upside potential. Our low end is $6 here from JP Morgan for an upside of 100%, while our high-end price target is $12.50 for an upside of 317%. If you've made it to our third stock today, then this is a reminder to make sure you hit that thumbs up button. Third on the list is another company that we talked about a while ago. That is Payoneer. They trade under the ticker PAYO, currently priced at $7.80. Over the past year, they're up 28% overall. We chatted about them first back around the start of February. The stock has gained about 60% since then, and in the last 3 months is up about 47%. Payoneer has a global payment and e-commerce platform. Payoneer brings democracy to global commerce, giving small and medium businesses access to a worldwide financial platform. They offer their customer base, both small and medium businesses, a range of services that make it easier for them to both send and receive payments. They have been in the business of digital payment services and online international money transfers since 2005 and offer their customers a trio of vital features: low fees, fast payments, and dependability. On August 7th, they shared their Q2 earnings report, where they saw both an earnings and revenue beat, guided above guidance, and also confirmed an acquisition of a new company. They reported a second quarter earnings per share of 9 cents, beating expectations by 3 cents per share, while revenue grew nearly 16% year-over-year to $239.5 million, beating by over $16 million. The company raised their full-year guidance and also announced that they acquired Squad, a human resource and payroll platform, for $61 million cash. And just a couple of days ago, we saw an analyst from Needham increase their price target on the stock along with their buy rating. They increased their price target to $10, saying that they recognize Payoneer as a leader in cross-border payments for small and medium businesses, particularly in emerging markets. He said the company is just beginning to tap into a significant and expanding market. Their confidence is also bolstered by the company's potential to consistently surpass expectations and raise future performance outlooks, particularly in the second half of the year. Payoneer has 7 current analyst ratings, all coming in with a buy. And their average price target comes in at $8.79 for an upside potential of over 12.6% from current prices. Looking at those ratings down below, we can see actually 5 analysts all recently increasing their price target on the stock. Our low-end price target is $8 per share for an upside of 2.5%, while we have a couple at our high end of $10 for an upside of 28%. So that is a look at 3 strong buy stocks, all priced under $10 per share. Let me know your thoughts on these companies in the comments down below and which one catches your eye the most. I always love hearing from you guys. Please keep in mind these videos are never a suggestion to buy or sell any specific stock, so please make sure you stick to your own investment plan. Thank you guys so much for watching. Have a fantastic day, and I'll see you back here next time.